Welcome to our deep dive into Tesla Inc. TSLA, and its recent stock performance.
With Tesla experiencing a mix of price adjustments, analyst downgrades, and high-profile purchases by investment funds, we'll dissect what's really happening behind the scenes and whether now might be an opportune moment to consider investing in Tesla. As of the latest update, Tesla's stock trades at $163.57, marking a modest increase of $1.07, plus 0.66%. In after-hours trading, it slightly rose to $164.01, plus 0.27%. With a trading volume of 96,776,593 shares and a market capitalization of approximately $520.936 billion, Tesla remains a behemoth in the electric vehicle (EV) sector. However, the stock's 52-week range between $152.37 and $299.29 highlights its volatility in the market.
Tesla recently announced a price increase for all Model Y vehicles in the United States by $1,000. This follows previous price hikes, signaling ongoing adjustments to Tesla's pricing strategy.
Amid these developments, Cathie Wood's ARK Invest has been aggressively purchasing Tesla shares, buying 216,682 shares despite a 4% stock drop, signaling strong belief in Tesla's long-term value. The landscape of analyst opinions on Tesla is mixed, with notable downgrades from Wells Fargo and UBS, citing concerns over delivery forecasts and profitability. Despite this, some institutional analysts see potential upside, with average price targets suggesting room for growth. Intriguingly, despite negative public commentary, institutional trading patterns indicate increased holdings in Tesla. This raises questions about the motives behind such commentary, possibly aimed at manipulating market sentiment to benefit from lower stock prices.
Tesla is currently viewed as overvalued by some analysts based on forward P/E ratios compared to other mega-cap companies. Moreover, Tesla holds the dubious honor of being the most shorted company in the U.S., reflecting significant market skepticism.
Critics, including analysts from Wells Fargo and Colin Longan, have downgraded Tesla with bleak projections. Yet, historical analysis of their track records suggests that analyst predictions often trail rather than predict market movements. This phenomenon was evident in the delayed adjustments of target prices following Tesla's stock price movements. Data from the fourth quarter of 2023 indicates a 4% increase in institutional trading volumes of Tesla stocks, suggesting a continued interest in Tesla by major investors. This contradicts the prevalent negative commentary, hinting at a possible strategy by institutions to leverage fear to their advantage. Tesla's current position is a complex interplay of market sentiment, institutional strategies, and financial performance. The discrepancies between analyst predictions, institutional behavior, and Tesla's strategic price adjustments provide a fertile ground for contrarian investors. While the near-term outlook may seem daunting due to analyst downgrades and short interest, Tesla's pioneering status in the EV market and its aggressive pricing strategy could position it for future growth. Investors willing to look beyond the noise and consider Tesla's fundamental value and market potential may find current levels an attractive entry point. As we navigate the volatile terrain of Tesla's stock, it's crucial to dissect the narratives spun by market analysts and institutional players. By critically evaluating Tesla's market position, pricing strategy, and the broader EV industry landscape, investors can make informed decisions free from the sway of market manipulation and herd mentality. Remember, investing is not just about following trends. It's about understanding the underlying value and potential of a company. Tesla, with its innovative spirit and disruptive potential, offers a compelling case for those looking beyond the immediate horizon.